On today's video, I'm gonna take a quick look at my Medium account, just do a quick overview. So let's get started. So like I mentioned, today we are going to take a quick look at one of my accounts. And the reason I want to do this overview is pretty much for myself to see where my portfolio is at, what are any positions I might let go of, and for what reasons I'm going to let go of those positions, and will I buy anything else, will I add on to any of my other positions, or would I look for new investments? So if you guys don't know, I have about 4 accounts. I have a Medium account, which we're going to take a look at, which is right now sitting almost close to 9K. I have a small account, and the reason I have many accounts is I'm learning a lot about the market every single day, and I've invested so many hours in the past 6-7 years learning about the market, and I'm still learning. And I think one way that really helps me learn is if I try a new investment style and create a new account for it. So this Medium account I actually just recently started, and it was pretty much to go and see a form of growth investment style, and that's how this Medium account mainly focuses as. I also have a small account which just broke 2K, and this is pretty much, I've had a lot of friends that always ask me, hey Jose, can you make money with such a small account in the market? And the small account definitely shows that it does. I can only say yes so many times, so I decided to actually just make a small account where every week I add about $100 to that small account, and I continue to invest in the way I would invest. Then I have my large account, which is a little bit over 23, and this is pretty much just a mixture of everything I have learned throughout the years. So it's a very, very diversified account, if I would say. Every day I'm learning something new, and you can see it in that account. And then I also have a Robinhood account, which is close to 13. To this account, I do not add any money to it right now, and I'm trying to transform it into a small dividend account and just continue, like I said, continue to learn that process of the different investment styles. So roughly I have about 46 in the market right now. And again, to many people, it might not be a large account. I think it's all in perspective, right? To certain investors, that might seem like a little bit of money. To other investors, that might seem like a lot of money. And that's the main reason, right? It's all about perspective. Some people might think it's a lot. Some people might think it's a little bit. But that's exactly the whole point of all these accounts. It's, hey, can you really, it doesn't matter how much you invest, right? It's just how you continue with that investment. If you continue to learn, then you will continue to grow your money. And before we go any further, guys, don't forget to hit the subscribe button, the thumbs up, and the bell. It helps the small channel out so much, and I truly, truly appreciate all the support. If you guys ever want to get in contact with me, I'm very, very active in the comments. I respond to almost all of all the comments. And also, if you guys want to follow me on Twitter, I'm also very active there. And I actually have a Discord channel. All the information should be below. And if you guys want to look at any of my portfolios, I have them there. And no, don't worry, I'm not charging you guys for anything. All of this is free. I'm not a professional, so why should I be charging for anything? All of these are just my thoughts and not advice. All right, so I'm trying to do maybe this type of account overview at least maybe once a month for sure, maybe even twice a month. So last week, a few weeks ago, I did my small account. This week I'm doing my Medium account. I don't know what you guys want me to do next. Do you guys want me to do another small account? Do you guys want to see a repeat of my Medium account, or should I move on to my big account? Feel free to let me know in the comments below, and whichever gets the most is the one I'll do in the upcoming weeks. To me, it's good either or, because any account I just sometimes need to take a quick overview of my accounts and see what positions I have and what positions I need to let go, or if any do I need to let go. All right, so just a quick overview of this account. It's only 9,000, but I have about 40 companies in it. And so many people are going to be like, Jose, with 40 companies, how do you make money when you're so split up into so many different companies? You're never going to make any money. And my answer to that is, I understand there's so many different ways of making money in the market, right? There's so many ways you can have an account. You can have an account with 5 companies and beat the market. You can also have an account with 100 companies and beat the market. It all depends on how your investment style is, right? There's, like I said, in this market, you could be a trader, you could be an investor, you could be a swing trader. Any type of way, there's ways to make money. So you're never gonna see me criticize someone for their investment styles, because I know my investment style is unique. And like I said, just from all the experience, I know there's so many different ways to make money. The main reason I have about 40 accounts is I know I can be wrong, and I'm wrong a lot of times. So by having a diversified portfolio, it allows me to know if when I'm wrong, my portfolio is not gonna break down and fall. And you're gonna see even a small portfolio, a 5% investment, if that company does really good, that 5% adds up to your overall portfolio pretty much. After that, I'm also gonna show my portfolio breakdown of how I have it, just my thoughts. Like I said, I'm really thinking about selling some of my shares and why I want to sell those companies. I'm also going to talk about my top 6 winners and why I and what I've learned from those winners, and my top 6 losers and what I've learned from those losers. So again, this is pretty much just a diary so I can be able to quickly update my portfolio. So right, let's start off in showing my portfolio. My portfolio has about 40 positions, and up to right now, this portfolio is up 26%. So yes, like I mentioned, right, you could make money just having a whole lot of different positions in it. And you can see all of these positions. We'll take a breakdown of how this is percentage wise, but right here I have 40 positions. I want to say over 90% of those positions I have done video analysis on, in-depth analysis on all of these companies: Disney, Berkshire, Google, Huya, Square, DraftKings, Bank of America, Activision, SE, Micron Technology, Microsoft, IBM, Baidu, EA, all of these, Spotify, Uber, all of these companies. At least 90% I have done an in-depth analysis of all of them, and that's how I've learned to invest, right? Like I said, if you guys are new to this channel, I do a full 20-minute in-depth video of a specific company, and that's how I invest, right? I need to make sure I know what I'm investing. I need to make sure who their customers are, what kind of revenue growth, their kind of balance sheet, their margin growth, their cash flow statement. So I'm not like most YouTubers out here that I'm here literally trying to just invest on the best way I can. And I feel like certain viewers are appreciating that, and that's why I'm seeing my viewers grow, because I think a lot of people actually want to learn how to determine if a company is good or bad. And even with all the hard work I put in taking a look at these companies, sometimes I could be wrong. And the thing is, just with all the analysis I do, I'm hoping my risk, I'm reducing my risk by only investing in strong companies. But even strong companies, I could even get in at the wrong time and it could be a bad investment. But right now, I'm actually doing pretty good. This investment, like I said, this portfolio is up 26% right now. Yeah, we're gonna take a quick look at the breakdown. And here we can see, right, these are my 40 companies. My biggest positions right now are Disney, which owns 7%, Berkshire, which owns 6%. And to be honest, I think Berkshire might be one of the positions that throughout this process I have become not less bullish on, but I wish I would have that money elsewhere. So right now, I don't really see a strong investment in any other company, but if I do think Berkshire will be one that I might start to pull out a little bit out of. 6% Google. Google is one of my favorites. Google and Disney, Huya, are definitely some of my favorite companies. Huya owns 5%, PayPal owns 4%, Square owns 3%, DraftKings owns 3%. And like I said, it's crazy. Someone might be like, Jose, how do you have these many accounts and how do you keep track? I mean, every single day, I literally take a look at a company and try to understand the market. So like I said, most of these companies I have definitely done an analysis on, and that's how I understand why I'm invested in them. So let's take a look at my top 6 performers, right? And this is pretty crazy. My top 6 performers have shown me the following. First, even small positions add up in profits, right? It's not even if you have small positions in different companies, if they go up, they will increase your portfolio's holding. So my number 1 winner is PayPal. PayPal has been up 70% since I bought it. Disney is another one, up 37%. Carnival Corp Carnival Corporation, this is one that I wish I would have bought more. I literally did an episode on Carnival when they were at the bottom and how I liked them out of all of them. That's why I entered this position, but it has given me 158%. And like I said, sometimes I wish I would be a little more aggressive, but at the same time, I know my risk and I know my risk tolerance, and I didn't feel comfortable at that time risking more. Next, we have Square. Square is up 66%. We have Google. Google is up 21%, and we have DraftKings up 51%. And just on these six positions, I've made about $753 on just these 6 positions. All right, and it's positions that have add up. Like I said, very small positions. None of these are over 8% of my right. PayPal, which is my biggest, PayPal is only 4%, and it's one of my biggest winners. And that's what I'm trying to show, right? That even a small position can be such a huge leader in your portfolio. And this is why I'm okay investing like this. Right now, out of these top 6 winners, I don't have any plans on selling any at the moment. And actually right here, back on my portfolio breakdown, I actually took a look at what companies I might want to sell off in and what companies I want to buy into. So the ones I haven't read, if you guys won't be able, there's 3 I haven't read. All right, so the first one is SOXL. This one I want to sell off soon because it was pretty much just to try to pick up the uptrend of that bullish market, but I do think I can use that money elsewhere. The next one is SLF, and this is an ETF for the financial sector. And SPY, I'm pretty much kind of moving away from ETFs and pretty much want to trust my gut feeling on where I want to invest. So I'm pulling out of there as well. And the other one is United Airlines. United Airlines is one of my smallest airline positions I have. If you see here, I have number 24 is Southwest, and I have Delta somewhere. Number 28 is Delta Airlines. United is very small portion, and like I said, right now I might just want to sell that one off. And the ones that I'm thinking about entering are Okta, which is a software company that deals with cybersecurity. Workday, these are my smallest positions. If you take a look at these, Okta, Workday, Ping is another security software company, CRM, Salesforce, and NTES, which is an esports in China. All these companies are less than 1%, right? Here we have NTS is 1% of my portfolio. CRM and Ping are about 1%. Workday and Okta are closer to 0% than 1%. So I want to sell off in those other companies, the SLF, which is my ETF, because I trust, I'm starting to have more confidence in my ability to pick a strong company, and I want to use that money from SLF and increase my position in those. Next, let's take a look at my worst 6 performers. And fortunately for me, my worst 6 performers have actually been my smallest positions. So my worst position, my worst dollar gain has been Okta, and I'm down $1 in it. Dropbox is another one that I'm down $1 in as well. Workday is another one that's 0%, almost 0% of my portfolio, which is down 94 cents. Salesforce is actually one of my worst losers and is up 23%. Techie is up about $4, and United Airlines is up about $6 for my overall portfolio. But like I said, right, this is the best part about diversification. Even if some stocks are slow or bad, it doesn't affect my full portfolio, right? But the thing is I'm not saying to go out there and buy every single stock. Like I said, every single one of these stocks I have a video on. Workday, Salesforce, United Airlines, Techie, Dropbox, Okta, all of these I have done at least a 20-30 video on, and that's just a video. For me collecting that information, it takes me about 4 to 5 hours looking at a company and trying to understand what they do, trying to understand their competitors, trying to understand what their competition looks like. So that for me is how I invest. And like you can see, my losers aren't really losers. Most of them are actually up about a few cents. And the ones that are down about $2. Another really cool thing but something worth mentioning is most of my losers are actually software and cloud companies, which is interesting, right? Especially since most of these companies have taken such a big drop in the past week. These are still not really affecting my portfolio. And like I said, most of these are ones I want to add on. And that's actually it for this episode. Like I said, for me right now, I just wanted to do a quick overview of my portfolio, of just seeing what I actually wanted to buy, what I wanted to sell, and what I have learned from my six best and from my 6 worst. So let me know what you guys think. Are you guys in any of these stocks? How is your investment style different from mine? And like I said, right, just because your investment style is different from mine doesn't mean I would ever criticize it. There's so many ways to make money in this market. It is ridiculous. So and someone with one stock in their portfolio can probably make way more money than me, and that's okay, right? Because at the end of the day, every investor has a risk tolerance, and I think that's what's the most important, understanding what your risk tolerance is to a position, right? Because when these companies start to go down, they don't affect me as much, right? Especially since they're in different sectors. If right now software companies start to go down, they're not such a big portion of my portfolio. So I'll be okay. And that's why I like being diversified. It helps me keep a cool mind. It helps if one of my companies starts to do bad, I will still be okay, and I won't do any irrational decisions that will make me lose even more and more money. Like I said, if you guys want to learn more, feel free to join my Discord channel. Feel free to post on the comments. Feel free to find me on Twitter. Hope you guys enjoyed the episode. Make sure to subscribe, hit the thumbs up and the bell. It helps the small channel out so much, and I truly appreciate it.